Most beginners open a chart, see a chaotic mess of red and green lines, and panic. To survive, they download cheat sheets and try to memorize dozens of complicated pattern names like bearish engulfing or evening star. But you don't need a cheat sheet. Every single candlestick is telling you a real-time story. It is a literal snapshot of a tug-of-war between buyers and sellers. In the next 5 minutes, we are going to break down how to decode that market momentum and pressure. By the end, you'll know exactly how to determine who controls the price at any moment. Shifting your mindset from blindly matching shapes to actively interpreting live price data is what separates gambling from trading with professional conviction. A candlestick measures a specific time period. It shows exactly where price opened and closed. If buying pressure pushes price above the open, we get a bullish green candle. If selling pressure drops it below the open, we get a bearish red candle. The distance between that open and close creates the candlestick body. The sheer vertical size of that solid candlestick body tells us everything we need to know about the current market momentum. When you see a massive body, there is heavy momentum. One side has overwhelming institutional conviction. A tiny, flattened body tells you the exact opposite. The market is hesitating. The physical size of the candlestick body directly answers the most important question on the chart. Who definitively won the battle for that time period? Wicks are the thin lines extending from the body, marking the absolute maximum and minimum prices reached. They reveal where price tried to go before being violently rejected by the opposing side. That rejection wick shows a massive failed push. This brings us to a specific setup called the doji. It has a tiny body in the middle with long wicks extending on both sides. This shape indicates a total stalemate between buyers and sellers. A major beginner trap is assuming a doji means an automatic, immediate market reversal. It doesn't. A doji simply signals a pause or a state of balance. The momentum has stalled out, but the trend hasn't broken. The solid body shows who currently holds ground. The wick acts as a radar, revealing exactly where the opposing side is fiercely fighting back. Once you understand the anatomy of a single candle, you have to look at how they aggregate and layer over time. A lower time frame candle, like what you see on a 1-minute or 5-minute chart, only represents a brief, volatile skirmish. If you take 4 consecutive 1-hour candles, they mathematically combine to form a single massive 4-hour candlestick block. Higher time frames, like the 4-hour or the daily chart, are inherently more reliable. They carry the weight and trading volume of a larger macro war. If you trust isolated candlestick shapes on a 1-minute chart, the noise will obscure the real institutional intent, and you'll end up trapped. Zooming out to filter your charts by a higher time frame mathematically strips away that market noise, revealing the true directional momentum of the price. This leads to our final, unbreakable rule. Never trade a candlestick in isolation without looking at the overarching structural trend. A common mistake is blindly buying because you spot a single bullish green candle, completely ignoring the fact that the macro trend is heading heavily downwards. Combine a rejection wick with a structural support zone. When price pushes down into a base level and leaves a long downward wick, the support held. The ultimate confirmation comes right after. A massive momentum candle breaking in the opposite direction. The surrounding context dictates whether your candlestick signal is a valid shift in power or just a temporary trap designed to take your money. Marrying the internal anatomy of a candle with the macro structural trend is how you anticipate market intentions, rather than just reacting to them after the fact. Look at the difference. You now know how to evaluate momentum based on body size, calculate rejection through the wicks, and align all of it with the macro trend. Mastering this logical workflow permanently replaces the anxiety of relying on static pattern cheat sheets. Your next step is to open up a daily chart, locate an indecision candle, and trace the story of how control shifted immediately after it formed. Every single chart is constantly communicating its story, and now you finally possess the exact vocabulary to listen.